Hi, Warriors. Ingmar, Mike Delfino, Mike Bergman. How are you guys? Hope everyone did okay with the Fed yesterday. If you listened to Blake, you did fine. Euro broke out, heading towards 110, 111, in my opinion. And there must have been some disappointment from the BOE by the way the cable looks this morning. Am I correct, Ryan?
Yeah, a little bit.
Okay.
A little bit.
So
it's a bit in the balance at the moment.
I'm buying.
Big breakout in euro sterling.
Right. Yeah, that tremendous trade you have on there. I bought crude today. Let's see. Aussie made a new high.
Yep.
Okay, so the only thing that didn't make a new high was cable. And is that because of the BOE?
Yeah, I think there's a lot of the market who was in that. It didn't move yesterday after the Fed, really.
Yeah.
You know, Aussie broke up, euro dollar broke up, CAD broke down, dollar CAD broke down. We couldn't get through that 124 again in cable.
Okay. And U.S. dollar yen got hammered yesterday. The only positive thing I could say is, unlike the dollar, it hasn't made a new low.
No.
So what are you thinking in here?
I'm thinking it's playing a range. You know, 128's probably where we're looking at, maybe as a pause point down below, and that's going to, we maybe see an inside range 128, 131s, which is inside the 127s, 134s.
Okay. The metals lit it up yesterday. Silver almost got to that, to get to 24 and a half. Let's see.
Touched it today.
24.49 high so far. And this high was what, 49 here. So they're teasing people that right now that it's not going to take out these levels for a double top. So let's see. I think there's a few stops, some unfinished business above there. I don't know how much we'll carry above it. Stel, since you're here and you're calling it a breakout over 24.50, what does that project if we accomplish that today?
That's a good question. I want to see a daily close above 24.50. Having said that, remember I've talked about 24.50 or 22. Yes, at some point after the Fed, and while the pressure was running, when it looked like Powell was not going to give anything to the hawks, I just said silver was trading 23.50 at the time. I said, look, I'm not going to wait. I'm getting my other half in at 23.50. So that was
smart. Nice.
Well, it took a gamble there and it worked out.
No, it wasn't a gamble. I mean, you know, that's part of your intuition of seeing that, you know, wasn't going to happen. And, you know, we've been waiting for 22 and a half for what? It goes back to where? In here or something, you know, where you know.
Weeks we've been talking about it.
Yeah.
So sometimes it works out, sometimes it doesn't. If we do get a breakout, I think the next level is just short of 26.
Okay.
25.77 is a fib. Also 26 is a level of interest. So it's a nice round figure as well. So I think it's clean air until there. But obviously it's not a given, you know, nothing goes in a straight line, but it's definitely looking good so far.
Okay. And when we get K-Man in here, how are you, buddy?
Good morning, Dale. Good morning, everybody.
What positions do you have on after yesterday?
Long euro sterling through option. Well, actually, I'm a little over half hedged now on my euro sterling call. The cash is gone, but the euro, the 88.5 call is doing doing very well. I think we're on our way to 90 likely, unless ECB disappoints. And for the rest, yeah, still I'm a little long euro NOK as well. I think we're on. I always feel a little weak to me, and then I'm looking at the European gas prices as well, which are pretty low now. So I think euro NOK could be on an attempt for a break higher. So I'm a little long there, and then I'm playing cable from the short side, but managing quite actively. And then long-term, long silver, and yeah, magic level 24.5, tested it again. Let's see what happens.
Okay. Nice trading. And let's just take a quick look at yields here. So
yes,
they got
dangerous.
hammered yesterday, but again, just like the yen, they're not at new lows yet. So
No, but it's looking a bit dangerous ahead of tomorrow. If we would get a bad labor report in the US,
oh yeah,
and the 2 years are 408, so they start to flirt with that 4% level, which I think is a little illogic, but it's a fact.
okay. All right. So ECB today, right?
Yeah.
Okay.
So we're expecting 50 BPs. It's in 9 minutes, right? 50 BPs, and the market is expecting a couple of other similar hikes afterwards. So that's a pretty hawkish expectation. So Queen Suntan will need to live up to those expectations to keep the euro going. Any sign of weakness may be punished a little over through some, yeah, euro dollar 109, 109.40 is now the major zone to watch on the downside. And yeah, any signs of weakness, and we may see a bit of the repetition of what we are seeing in sterling, in the dollar yesterday after the FOMC. So the market is really scrutinizing what every central bank is doing right now. But if she gives or she lives up to the promises and stays on the hawkish side, yeah, I think euro dollar can push through a little bit. The 2-year EU and US differentials are on very important levels. If they push through higher, euro could fly again.
Okay, let's get to risk. Market celebrated the Fed. What do you think came in? The market really gleaned. Was it the presser? I didn't really, I can't stand watching those.
Yeah,
I put on Johnny Lang Lie to Me.
yeah. I think some of the damage was already done in the statement, as I said. There was this one word that they changed, and they went from the pace of rate hikes to the extent of rate hikes. That was the first thing. And the other one was absolutely no change to the QT, or no special measures against the loosening of the financial conditions. And that's what in the end did it. And the press conference was just a timing market with the stopwatch in hand, and for as long as Powell didn't fight against those loosening financial conditions, it was a green light to sell a few dollars, right?
Yeah. Okay.
But I'm not sure whether I agree with the market in the longer term that they are going to cut rates this year. I'm still not convinced about it.
All right. I think we've covered pretty much a whole board. Anything
And
else
we got
you wanna
about 7
cover?
minutes to the ECB, baby.
Okay, so nice call on I don't know if the bull flag held intraday, but the outcome that you called yesterday, Blake, and both the S&Ps and Euro were spot on. You mentioned copper earlier in the week. Still looks like it's rolling over here, which is kind of interesting considering Aussie's making new highs. Maybe there's something going on in China, but looks like copper may want to come back and check the breakout at $4.
Yeah, well, thanks. The bull flag pattern played out actually to pretty much a T, and I mean we extended
Let's
it just
see it, buddy.
Yeah, sure
Let's
thing.
see.
Here I'll take you guys over to the bull flag pattern. You can see this is the bull flag pattern. We got a little bit of a spike just post Fed,
Right.
but as it was drawn out, and we were, excuse me, guys. We were actually, talking yesterday with the ForexAnalytix community during the daily roundup, before the Fed. And, I mentioned, hey, a break above right above 4,000. It's going to be a quick move up to 440 or 4140, excuse me. And it was, and we're stalling here, and I think it's an important resistance that we're holding. And I think what's more important is that you didn't see follow through in Asia, and I think that's significant. And I'd love to hear what these guys are thinking over here in Europe, because if you take a step back, and this is the point I was making with Chris Weston last night, I'm like, if you listen to what Powell said, I mean, he's delivering the same message. Not much has changed, in my opinion, but he does say he's going to keep rates higher for longer, and there's still a couple more rate hikes to go. And the market just, still believes that at some point you're going to start to see data roll over. And when data does roll over, the Fed's going to be forced to act. And, they're still calling, the Fed's bluff. So what do you guys think here as far as the Fed goes? I mean, what were your thoughts, Ryan, walking away from this?
Yeah, exactly that. He could have said the rates were going to 8%. The market wouldn't have believed him. As Kay said, whatever was going to happen, the market was going to sell dollars, and it's done that. We are at the end of the Fed path. Whether it's one hike or two more hikes and rates stay up, it doesn't matter. The market always trades ahead, and it's going to be trading the pivot, the cuts. It's already pretty much priced in a cut end of year. That's going to bring the next trend, and that's where the data is going to matter even more these next few months, because it's going to confirm a soft or hard landing, and thus our cut's going to come sooner or later. And that's what we're going to be trading. That's what's going to drive the big trends from this point forward.
Yeah. Well, hey, Charles said Joseph Wang created a YouTube video with the best analysis of Powell. I think I'll actually go back and watch that. I didn't get an opportunity to last night. Joseph Wang's he's a trader. He was a trader at the Fed, and we've interviewed him quite a bit at the Trader Summit, and matter of fact, Dale has here as well.
That's where he started here.
What's that?
That's on F.A.C.E.
Yeah. And he's a really, really awesome individual, and he's got a lot of knowledge. And so I'd be interested to see what he has to say. But regardless, I'm not. Here's the thing. I said this yesterday. Last night. I'm not going to be falling for it here. I'm not chasing the markets higher at this point in time. Doesn't mean the markets won't go higher. It's just from a risk reward perspective, it doesn't make any sense to me anymore. And same thing with chasing the dollar lower. I am a continued dollar bear overall, but we're hitting new lows at this point. Everything's divergent. I know that we're still in a bearish channel. I'm very well aware of it. I'm just not chasing the market down here, and I'll have to find other things to do. Stel, you were talking about silver making a move. I mean, is silver really making a move, or are we just up at its channel high again?
We're not confirmed yet, no.
Okay, not confirmed.
But it is it's trying to make a move.
It is trying to make a move, but you have gold that just made a new high with divergent relative strength. And if gold can't expand on this gain, as we're trying to make, again, new highs here, relative strength not making new highs. What happens if gold fails? Do you think silver just slides right back down? Because that would be my thought.
Yeah, silver is usually gold times 2, right? And look at today, gold is marginally up, silver is up 1.7%, whatever it is. So gold is still bullish in my view. I think if you look at the chart, it's still looking bullish. Maybe due for a retracement at some point, but silver has not broken out of 24.50. So not quite there yet, but really trying.
Hey, we have the ECB, like literally their statements in about 15 seconds. Yeah, so you're going to see, I just have the euro up here. The euro's following a big channel. Just so you guys, if you guys haven't seen it, it's a huge channel higher, and we hit channel resistance overnight. So One of the other things that has me a little hesitant about chasing the euro up here.
50.
As expected, right?
Yep.
Yeah. So, all right, we're gonna have to wait for the presser. I'm
Cut or
assuming.
hike.
So yeah, and one of the things I want to point out about the euro, here's the euro channel. We've had this drawn out for literally weeks. So all we're doing is nudging right up against channel resistance here. It should be really
let's
interesting.
not forget that piece that Gregor wrote that going into the Fed, we're in wave 5 in the euro, which means it doesn't give you the price where it's going to end, but it's an ending wave. So just keep that in mind.
You know
absolutely.
what's also really interesting. You're not the only, or Gregor wasn't the only one to point that out. Also, Jim Welsh of Macro Tides was too. He actually sent out last night to his folks an updated count on the dollar last night, and so that I found that really interesting. He pointed that exact thing out. So it's. I don't know if Greg is here this morning.
Didn't Jim think it was going to hold 102? And
What's
the
that?
low was in. Prior to his new call, I'd been reading that Jim thought 102 and the Dixie, the bottom was in before yesterday.
Yeah, I think he's been trying to find that bottom in the dollar. Excuse me. But he had an updated count last night that came in around these levels. So
okay, everyone should go to Trader Summit and get his revised count.
Yeah, it's this interview right here on Trader Summit. But let's go. We're going into the ECB press conference. K-Man, what are you thinking going into the press conference today? What are we going to get?
Sorry, guys, I'm
Christine?
updating the ECB.
What's that?
I'm updating the ECB on our pages, so I can't really talk right now.
Oh, okay, sounds good. Ryan, what do you think going into the ECB today? Which Christine Lagarde are we going to get? The really tan one or the haven't seen the tanning beds in four weeks one? What do you think?
Yeah,
Sorry.
I think we're
getting a go there.
I'm gonna have to send out my my little cheat sheet on the Twitter in a moment, and yeah, she's going to be hawkish. She's going to keep the pressure on. As I said earlier this morning on the Flow Show, they're not going to go like Powell's gone and let financial conditions, go too loose. They're going to stamp down on it, the transmission of policy. So it's really about, is she going to stick to the 50s? If she reiterates that, then the market stays well bid. If she dials back on the next 250s to come, then that might be where we get problems for the euro.
All right, and then just taking a look around, the euro complex. Let's just take a real quick view around. So you got the euro yen. It's it really hasn't moved much, but you can obviously see that we start breaking through like 140.50. That's problematic for the euro yen. I mean, you should get a swift move right back down to 138. You got the euro sterling that it's got a butterfly pattern, almost completed it this morning, following the ECB, but above 90, or excuse me, 89, looks like we're going towards 90. So you got, euro yen not looking so bullish. You got the euro sterling that still looks bullish, but we're past the Bank of England at least. You got the euro Aussie that's holding up. And it's holding a really, really critical support zone. The euro Kiwi isn't doing a whole lot. And then you go to the euro dollar, and it's obviously a really critical resistance. And chasing, like I said, a few minutes ago, chasing the euro up here or chasing the dollar lower just doesn't make any sense to me. So, you got a little bit of a mixed bag. It's going to be really interesting. Stelios, do we get bright neon orange Christine Lagarde or not? What do you think?
Do we get it? Well, the ECB, she's been hawkish. Everybody's been hawkish for the past weeks, but we're starting to see, as expected, right? We're starting to see the Fed slow down, and the talk was a little bit hawkish in the beginning, but then, he opened the door by saying a couple of hikes, and we're going to be going month on a meeting by meeting basis. For me, that was very important, and on the dovish side. And so I think that there's reason for Lagarde and Bailey and all of them to start toning it down. So again, as I said with the Fed yesterday, I don't see why they would want to unsettle markets and go hawkish, or more hawkish than the markets expect. So I think we'll get something a little bit subdued today.
Oh, well,
and I was right with Powell. So come on,
you were, and I got,
okay.
Okay. So since I didn't get a chance to pat you on the back already, and you patted yourself, so I'm going to pat you on the back and say, really, really great job yesterday, thinking that Powell wasn't going to rock the boat, because Powell did not rock the boat. He wanted to keep, the status quo. And let's take a look at the S&P up here. I mean, we did complete that bull flag pattern. And what's interesting, Dale, you called crude selling off, and crude was just hitting new lows just a little bit ago intraday. What happens if stocks actually take a little poop dive today? I said poop dive. How about if we take a little spill in the stock market? What happens to crude? I think crude, sees the low 70s again. One of the things about crude, and I do need to point this out. If you listen to what UPS is saying, you listen to what FedEx is saying this week. I mean, it seems like global growth they're expecting it to slow down quite dramatically, and one of the things that are going to probably get this smackdown as a result is going to be crude oil, right? So anyway, great call on crude. What do you guys do with stocks up here? Do you continue to buy stocks? Do you think this is the place to get long? What do you think, Stel?
We are at resistance on the S&P, so I think buy dips. And yesterday on the chat room, as the events were unfolding with the Fed, I think we had a pretty good grasp of the market overall. As soon as not Bernanke, as soon as Powell spoke, and we didn't get, if you were hawkish, if you were bullish the dollar and short risk, you expected something more, and he was not giving it. So I wrote on the chat room at the time, I said, look, if you are bearish stocks, you're going to be sweating now. And this was when the S&P was like, 70, 80 points below. So I think we got the hang of the market quite well yesterday. And I still think for choice, you want to be buying this market because it's the path of least resistance. Not here. I think I want to be buying dips. But I think we're going higher a little bit.
All right. Well, I forgot. Let's see who it was. Martin says, big tech earnings today. We do have big tech earnings today. Meta was it was good earnings, also a buyback. So that's obviously helping Meta. We have Amazon, Apple, and Google today. I think all three of those names are going to be really big, because we have, obviously Apple is just because it's the behemoth as it is. And you can see, Apple's trying to get back above its 200-day moving average, which probably, let me get rid of this. Take a look at Amazon, right? Amazon also trying to fill this gap right here around the 200-day moving average. Big one's going to be Google. And, Google is going to tell us a lot about how spending is, I think, from corporations, and you're going to see Google coming back up to the 200-day moving average. So a lot of big technical levels that we're going to be dealing with here in some of these tech companies. So it's going to be really interesting to see what happens today, throughout the course of the day, and then going into tomorrow. Don't forget, tomorrow we have the jobs report. How important?
Oh my God.
Yeah, how important is the jobs report? Because you got Powell yesterday saying he was just saying that they haven't seen weakness in employment. So one of the sticky things with inflation moving forward, because we got CPI coming up next week, is going to be this jobs report. And, a lot of people are expecting jobs to start rolling over, but will they? I mean, Ryan, what are your thoughts about jobs? I know, and by the way, I know you're giving away a couple of months of ForexAnalytix for free to anybody who can get
1 month.
1 month.
It's coming out of your paycheck. It's coming out of your paycheck, mate. Yeah.
You're giving a couple of those away, right?
Money's coming out of Blake's if he's mis-selling.
So tomorrow, just going over to the ForexAnalytix platform. Speaking of which, we're looking about 190,000 jobs. Here you can see a recent chart. Let me pull up a chart of NFP here just to give you guys a better view. Let me actually tighten that up a little bit. Okay. So we're still, you look at the jobs picture overall, it's not bad. We're still creating 200,000 jobs. Yeah, of course it's slowing, but is it slowing enough to clamp down on inflation? What are your thoughts here about NFP and how important it is going into Friday? Stelios, Ryan, what do you guys think?
I think we have to agree that jobs is probably the only good thing going for the economy at the moment, at least the only one that's been relatively consistent. And Powell mentioned that yesterday. So if that starts rolling over, then what happens? So I think it's going to be...
how about if it doesn't? Everybody thinks it's going to, because these rate hikes over the last year are going to finally work its way into the economy, and the lagging indicator of jobs and blah 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 blah. But how about if it doesn't?
Well, the question is, what's the job quality? That's what a lot of commentators was talking about yesterday, is that the quality of jobs is dropping. So it doesn't matter if everybody has a job, if it's a really crappy one, right? Or if people have 2 and 3 jobs. So we have to look at both things. But I think you're right. If jobs numbers continue to be good, then that's going to affect the Fed, obviously. But I think that for me, the most important number still is the inflation number of February. We really, really need to see that. So
okay, and which is going to be the next week, I believe, right? CPI data is going to be next week, if I'm not mistaken.
Is it next week? I can't remember.
I think it's next week. But Ryan, what are your thoughts about NFP on Friday?
Yeah, it's obviously important for the jobs picture, and just in case we didn't have enough spice this week, we've also got the potential for some weather-related shenanigans to come into the number. We've already seen that in the ADP, that poor print, 106k print versus 180k expected. The chief economist saying that it was affected by the weather. We've just had Challenger Gray layoffs out just under an hour ago. That posted 103,000 potential layoffs versus 43,000 the month before. So it's totting up all these little job cuts that we've seen over the last few weeks. They're all mounting up now. So, there is some worries potentially coming into the jobs market. So it's going to be a funny one tomorrow. If it's a big negative number tomorrow, we have to see, is it weather or is it real? If the market brushes it off as weather, then any negative move you get in the dollar is going to reverse pretty quickly. And I think for everything, the close on Friday is going to be important for a lot of markets, a lot of pairs, where we close. If we close above some of these break points, it's going to set us up for the next few sessions into next week. So, very important what happens tomorrow.
All right, very good. We have a couple of minutes. I know, K-Man, you were jotting down a few things, regarding the ECB. Do you have any? Is he still here? Do you have any comments? Yeah. Oh, do you have any comments, last minute comments before we shift to our interview?
Yeah, so she says another 50 BPs in March, but then question mark. And then I'm a little underwhelmed about no change at all to the APP or PPP plans, no acceleration of rolling off the balance sheet. So that's going to be still a very slow process. So I reckon that's why the market sold a few euros on the uncertainty. And it's a bit the same as with the rest of the central banks. If she doesn't confirm the high expectations of the market, we may see at least temporary bit of a dip in the euro, perhaps. But then it's going to be, for the dollar, it's going to be all about tomorrow's labor report, right?
All right. Well, thank you very much for your thoughts here. I actually, the euro, I just have to make sure that everybody understands. When we do analysis in the ForexAnalytix community, we do private shows. We put together the bias chart. If you look at the euro dollar, I have to make sure that everybody knows that we are bullish while we're above 107.35. Doesn't mean that you have to be long every day. Doesn't mean you can't trade counter trend, because I definitely do. But I also like to rejoin the trend. And when you're talking about the euro, any dip, in my opinion, back down to 108, 107 and change is a buying opportunity. So if we do find a dip in the euro, which, you know, I'm short right now, and I'm already, you know, I'm short and trading half my normal size. We get back to 107.70, 107.50. I'll be rejoining the bullish side with full size positions. So, you know, when you have a trend that's moving higher, you can navigate through that trend. And the best way to do that, guys, is, we just got news coming out. Hold on. I'm sorry. Initial jobless claims, a little bit better than expected. So that's going to be some dollar positive news. Look, I mean, the jobs picture is not so bad. You guys remember those days that we had the jobless claims that are registering around 400,000? Boy, those were the days. We used to see some volatility for every week, and I feel that those days are coming again. The volatility that we'll see every Thursday for the weekly jobless claims. But anyway,
unit labor costs, by the way, that's the number that's quite a bit lower than expected. So we're looking at the cost of labor now, right, for second round effects, and that's dropping.
And that's obviously probably one of the things that will keep the dollar, you know, contained from going too far. Anyway, what I wanted to say, you know, when you're trading in like this type of fashion, you know, as the euro is going higher, you're trading counter trend, you're looking for support levels to go get long again back in the trend. You know, there is really no better place to be than the ForexAnalytix chat room. And, you know, you can see us all chatting through here, going into the trades room, putting in our trades, where we're getting long, where we're getting short, not just us, but, you know, everybody in the community, you know, buying and selling different places. We have you know, S&P chat room. We have S&P and indices. We got the Flowonomics, which is the macro chat room. You got the general chat room where you're going to find myself and, you know, a lot of the other community. So take advantage of that through the trader funding program. I actually just talked to a buddy of mine that I used to trade with. He used to trade at my firm about 20 since in 1999. So that would be 24 years ago at my firm that I was a partner at in Dallas, Texas. I talked to him yesterday, and he's been in corporate America for a few years, working as a consultant for the last 10 years. He's getting back into trading, and he called me about the trader funding program. So, you know, you guys should check it out. It's a great place to be, and you get ForexAnalytix included with your fund, with your assessment. And we had a couple of people pass this week where they are now accessing our live accounts and larger trading accounts. So if you want to learn more about that, make sure you watch that video. And then we'll see you in the ForexAnalytix community. So Dale, have a great interview today.
Great. Yeah, that's a game changer, guys.
It is. It really is. All right. Well, have a great one.
Thank you, Blake.
Thanks, team.
Thank you, team.
Cheers, guys.
See you, Ryan. See you, Stel. See you, K-Man, Iceman, I mean. James Anderson, great to have you back. How are you, buddy? These are your days.
Hey, Dale. How you doing?
I'm doing good, James. So feel good to see advances in the precious metals, top of mind with what's going on here, background stories that you're seeing in the arena. Why don't you fill us in with, you know, I haven't talked to you since this bull run began in physical markets and miners, and it's almost become fashionable.
Not yet, I hope. Be a little bit.
Do you have anything to share on the screen, James?
Yeah, I mean, let me take you to my, let's see here. So it's less boring. 1 sec.
Okay. How things going in the mountains in Panama?
They're good. A little windy today. A little windy.
Yeah.
Yeah.
So I talked to Doug Casey about a month ago. He's in, what's that country he's in? Not Argentina. But, you know, you did what he recommends people do besides being diversified financially into things like gold and other hedges against, you know, what could unravel. He believed in also having political diversity, which means, having, another citizenship or another place to live in a different country to diversify, politically where you live, because things change.
Sure.
And yeah, so that, you're like the international man. People that have done that have left the States to carve out a different life for themselves outside the country. And you're hedged if things really unwind with like a stupid failure to raise the debt limit. That might happen this time. There's so much hatred between the parties and tear it down type of thing that, we may go over the cliff. Do you think that's going to happen, James, in this environment? Are you with me? I think we lost James. I talked too long.
He was going in and out earlier, Dale. Yeah.
Yeah.
I see him there, but
Yeah.
he's on mute. It's interesting.
Is he muted? No, I don't think he's.
Yeah, like I see him.
Hey, can you hear me now?
There.
There you got you now. What happened to you, bro?
I tried to share the screen and
okay.
got all screwy. Can you see my Twitter?
Yeah, we got it up there, James.
Right,
Thanks,
cool.
Blake.
All right. Yeah, sorry about that. So I think that's tough, Dale, just in general, living in a culture like that where it's political infighting every day. I think one of the hardest things about living in the United States is just the culture of not getting along and divide and conquer and having to deal with people who get sucked into that nonsense.
Yeah.
That's just on your soul, on your psyche. It's just a lot to deal with. And just to even have to get the eardrum abuse from one side or the other. Like
Yeah.
I give a full, like it's going to matter. I just think that's a huge waste of time. You only have so much you can control.
And
in your life.
energy
Yeah.
too.
Yeah. So I'm happy not to be. That's like one of the probably when I hear people who are retired here, the older, the boomer generation. That's one of the things they like the most about it is just not having to deal with that crap.
Yeah.
So, and I agree. I'm not anywhere near that age, but I enjoy being around them because most of them don't do that, and that's nice.
So you have a nice expat community in the mountains of Panama, huh?
Yeah, there's a good one, and I play golf with a lot of these old timers, and they're good. A lot of them are like ex-Vietnam vets and stuff, so they have some pretty good stories.
Okay. All right. So, interesting tweet. You talk about how I hear the roosters.
Yeah. Oh yeah. We go organic out here, Blair. I mean,
man. I hear an owl. I don't get roosters. You're in the country. I hear an owl when I'm up here at 4 a.m. So, that we'll talk about this Fred chart, but you also said had a tweet that silver trades two ways: slowly, gradually, then exponentially. So do you think that we're in this exponential part if we break 2450?
No, I think we got to get past 30, and that's just still going to be a long fight. 24 has been a huge consolidation channel the last month or two. And I know they don't want to give it up because next thing after 24 is 26. And then after 26, it's real quick to 30. And so, it's kind of like one step, two step, that kind of thing, tiptoeing toward 30. 30 is the break line. You get above 30 and it could chase this year, to 40 and something like that. It can happen. Depending on.
Could you think of anything that could create for people that aren't on board? I am physical, but I let go of my mining shares several weeks ago. Any chance, or can you think of anything that even if we get through this 2450 level, that could create a buying opportunity in silver around 21? Can you think of anything
you could have somehow a magical bounce in the dollar index, perhaps? If you look technically at it,
Yeah.
But it does look like it needs to, at least bounce some. It's gone down massively, right?
Yeah.
At some
Yeah.
point, you would think there would be some reason for it to bounce.
Okay. So some kind
know-
of dollar low. Maybe we need to take out that big round number of par. That's what I was saying
Yeah.
for the last few weeks to create the panic low for a bounce.
Yeah. I mean, that's the. But I mean, look, it's one of those things. It's 21 versus 24 versus. That's not going to matter. The fact is that you have some.
Yeah.
This is not a day trade. You're looking at this with a view of at least 2 to 5 years. I would say longer, because what we're about to go through is going to be tumultuous, and by the end of it, silver should be valued a lot higher. And I don't care what the nominal fiat number is. It's really about what it can buy you in real world, real goods and services in terms of asset classes, etc. So
yeah.
This is the long view, and so I know this is more of a trader kind of short-term podcast, but
I feel that way about the physical I own. I don't even think about it. It's kind of like some heavy stuff in the closet, right? But when I'm trading miners, I care more about it. I have to, except you know what? It didn't pay to be tactical. So even there, if I get another entry, it's one of the hardest things for me to do is to hold things a long time because I watch them too much. But I think it's embryonic in the miners. Even if you bought them here, in a few years, these prices will look cheap. But tough to break the paradigm of looking for advantageous entries and exits. But something that I'm going to try to do next entry in the miners. So
just one thing about the miners, like you got to know, obviously, miners totally different than bullion. They can underperform bullion and often do and have done for a long time.
Yeah.
So
miners
are fine if you select the right ones, and it's with gambling money and money that you can trade in and out of and take profits from and scalp with. That's fine. I just think that if you have, say 6, 8, 10 miners and you call that your bullion position, you need to recheck yourself, because these charts I find very interesting. This is the concept of a K-wave winter is basically where you go through a monetary reset more or less. And since 2011, we've kind of been in that zone, and pretty much since 2010, since 2008. I mean, you probably saw the news. Central banks have been buying gold now, and they're admitting it finally, to the tune of more than ever prior to World War II. I mean, they'll show you this chart, and you'll see this huge spike in 1967. And they'll say, oh, it's been the most gold they've been buying this year since 1967. And most people, it just flies over their head. 1967 was the year before the London gold pool price rate fell apart. And then gold went and did a 24x in price. Okay. So we're now kind of doing the same kind of thing, but we're shifting the floor underneath for a more multilateral, less unipolar world where gold has a lot more say in price discovery and commodity price discovery, et cetera. And so you have a situation now where you have so much gold that's flowed to government central banks since 2008. Watch what they do, forget what they say. What they say is a lie most of the time. So, watching what they do, you can see the record clip of net buyers that's been happening. I mean, it's setting up for a situation where, oh, surprise, gold is now into the monetary system. I mean, the IMF this past week had some type of study. I forget the title of it. I have to go back to my Twitter, where it's basically like they more or less say gold is in a barbarous relic, and is it coming back into the international system with a question mark. And while the writing of it, I mean, it wasn't anything too insightful for someone as nerdy and into it as I am. It did have information that was interesting in terms of data and charts. And pretty much since 1999, you had the Eastern world buying gold physically, and the central banks doing so, and the Western world net sellers until about 2008. And then the Western world said, okay, we're not net sellers anymore. And they stopped selling out of their hoards. But what's happened is since 2008, you have those ETFs that have been the paper hands in the market, essentially, where Western
GLD.
They'll buy GLD, they'll buy IAU, they'll buy SLV. And then when per quarter to quarter, if it's not working out and they're trying to cut losses, they'll cut losses, and there'll be a lot of physical that flows out of that to feed the Eastern markets. This is that chart that I was talking about, where they'll show you 67 and they'll tell you, oh, don't worry, look at all these bars. Dun, 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 something's happening, right? I mean, They
Yeah.
know that the thing totally imploded in 2008, and they've just been
Right.
buying. And this doesn't include China. You know, just China has been doing it probably on the sneak at a much larger scale than even Russia. Russia's been probably much more transparent about what they've done in terms of buying gold. So, anyways, the point
Well,
of
they
this
don't
matter,
have to buy it. They can just steal it from Ghana, right?
well, it's combination. Russia has the most gold reserves in Siberia in the world. I mean, they are going to
Yeah.
be the #1 miner of gold into the 2030s. It's just a matter. I mean, if they're not it already, they're second or third at the moment, and they're right on the cusp. I mean, it's between them, China, and Australia, and so Russia eventually will be. This is that IMF paper that was just published. You know, I mean, gold is an international reserve, so barbarous relic, no more ? Right?
Okay. Yeah.
You know, so it's you know, all the signs are kind of pointing to like this. This is a pretty good video. You can kind of see. It used to be
Yeah.
gold, right? You know, around World War II, and then
Right.
you know we started printing currency in order to do guns and butter and Vietnam, et cetera, and we dollarized the world. And by 1971, we took over in terms of you know what is the reserve currency that dominates most things. It
Right.
fluctuated a bit there in 1980 because the price level of gold got so high that you know central bank gold reserves were
Yeah,
larger
so
things.
high, 880 on the Russian invasion of Afghanistan.
Right. And so we're sitting in a situation now where look at the size in terms of where on balance sheets of central banks, like watch the end of this video. It doesn't fluctuate all that much anymore. I mean, you have a situation now where the US dollar is roughly, I don't know, 50% of balance sheets. Gold is, let me get to that, just pause it so people can kind of understand this. Yeah, all right. So 2020, right before COVID hits, it's just about half of all the reserves in the world are U.S. dollars. And as
Right.
you know, they'll tell you Russia, you can't use U.S. dollars anymore. So there goes half your balance sheet, right? I mean, that's the kind of risk that some of these central banks are looking at. And so of course they're gonna move into other things such as gold because they can own it and have no counterparty risk, and you know they can't be iced out. And then as well, they're looking around and they're thinking, well, look, bonds have performed some of the worst in the last year or two that they've done in history. And then what else? We have other fiat currencies we can hold. Like those are your two options. I mean, those are the major three options. You got IOU buckets of fiat currencies themselves, and or gold. So yeah, of course they're going to be buying more gold.
Or Bitcoin?
No, I look, I know that
Go
there's
ahead.
a Bitcoin.
I want to hear a tirade. Go ahead.
I know there's a Bitcoin pump going on right now. I'm still not sure exactly how they're doing it and in what way. I don't necessarily think that institutions are going to be going into Bitcoin in large scale. You know, there was a little bit of institutional buying last pump in Bitcoin, but I'm still under the impression that there's going to be a major scandal when it's all said and done, and something like Tether is going to come untethered, and we're going to learn the fact that, oh yeah, it was a massive wash trade with a lot of people who were kind of on the inside understanding how that worked and took advantage of it. And then there's a huge, the majority of the people in that trade had no clue that a lot of the price discovery was fraudulent. So I still, it could repump. You could see it go to 30, 40. I think, you know, the amount of fraud that we've seen in these markets the last dozen years, nothing surprises me anymore. But ultimately, I think in the next few years, there's going to be a huge collapse. And it's not just Bitcoin that's going to get smothered and go down to find actual price discovery without leverage and fake stable coin pumping. You're going to have a situation where majority of anything crypto is gone, dead. And so the only ones that are going to survive are the ones that actually have any type of utility or value that can serve humanity. And that's a small amount of them compared to the majority of them.
All right, let me ask you this. When do you think they're going to introduce the CBDC here in the U.S.?
In the United States? Well, Europe's going to be first, it seems. And CBDC for the United States, I would think it's 2023, 2024. The latter half of 2024 is probably when the launch will occur.
Wow.
Yeah, I mean, I've seen some timelines where it looks like the euro would be up by then, fully by 2024. The euro, I think, is trying to be introduced by the end of this year, right? So I would imagine we'll be a year off their pace. So
what do you have to say to people that say, well, they know everything anyway, so you know they don't really, you know, aren't big believers that it's also a control and surveillance mechanism?
You know, it doesn't matter to me, like, if that's your
because
your
you're
argument.
well,
like,
I'm talking about your American audience.
Well, the American
US
audience
others.
should be concerned because the unit of value that's using that's underlying it is going to be devaluing hugely because they
Okay.
have unprecedented amounts of debt and unfunded promise piles that are coming due this decade and the next. And the math doesn't work. You know, you have a GDP of what versus how much debt versus how many liabilities that are coming legally due that you cannot default on. How do you pay them? You print the currency. You create the currency. And so, yeah, so if you don't have a job or at least you get $2,000 a month so you don't go riot in the street, that's essentially what the CBDC grid is about. It's about a tool of control and a tool of keeping things in line so they can keep building their system. I mean, the CBDC is exactly what they're going for. I'm not necessarily convinced it's going to work completely, but it will work when they tell everyone, hey, you're getting your $2,000 a month stipend is coming through this portal on your smartphone. Yeah, 99% of people are going to take that money and just use it. And then,
Okay.
you know,
So it's an MMT
Yeah.
proxy. All
I
right.
think so. I think that's how
Instead
it's
of getting checks like they did during COVID.
Now you're talking about instant money. Imagine COVID, but having on a month-to-month basis. Like that will be the norm 5 years from now. I'm pretty convinced because you're going to have so much inflation that the only way to keep up and keep people, you know, from not
From
rioting.
rioting.
Yeah, exactly. Is you got to have, you know, your first of the month check. You know, you remember that old Bone Thugs and Harmony song, first of the month? It'll be something like that.
Yeah.
You pick up your smartphone and you start singing Bone Thugs. I mean,
Yeah.
that's basically what happens. You get your $2,000 check and you go to Walmart.
Yeah. Wow. Yeah. I tell you, it's amazing how right Orwell and I forgot who the other guy was that
Yeah,
wrote
there's
about
been
dystopia. Huh?
a lot of great dystopian books, but none of them have nothing ever comes true. Comes as good as the reality. Like the details, the fine details of reality, are so you couldn't imagine it. I don't care how creative you are.
Okay. So James, how's it
So
going
look,
on the physical? No, go ahead.
before we get into the physical front, I'm gonna get on the physical front on eggs. See, this is why the arbitrage of living in Panama and having roosters outside works because my dozen are $1.98.
Wow. Is that higher though than it was a year ago? Even there?
I mean, they may have been like 160 at the lowest when I first got here. You know.
Yeah.
But
yeah.
So, but this is at the most expensive supermarket. Like if I went around and bought them actually like from like the guys who raise them in their backyard, I'm sure you get them for cheaper if I tried. But
I'm coming. I'm coming down for an omelet because I can't afford one here.
Oh, they're delicious. Come on down.
Yeah. Oh man. All right. So yeah. So your cost of living's better. Everything. So, yeah. Why don't we talk about can people get U.S. Silver coins pre-65? Or are they still on back order?
Sure. Let's talk about premiums. I had a chart about premiums here. One sec. Pull that up so people. Because a lot of times in the last few years, premiums got so jacked up, they were literally you
needed a double. You needed a double in the price of silver to cover the
it was ridiculous. So for people who were shrewd and just stuck their money in derivatives, I understand, you know, because the premiums were ridiculous. This is the most ridiculous one, which is the Silver Eagle, and it's become almost collectible because the U.S. Mint is dysfunctional. But in the 2008 global financial crisis, when I started in this industry and kind of cut my teeth, this is what the trial through fire. This was my training. Was actually some, you know, banks are collapsing. People are calling you on the phone, and you know they'll buy gold and silver at virtually any price because they don't care. They just want to save. That true fear stuck with me. I knew that. Okay, so they papered it over in 2008 and 2010.
Yeah,
that's coming back at some point. It's come back, but not yet. These are not banks failing. This is just the COVID shortage and shutdown and crisis and burr and all the currency creation, et cetera, and the inflation that followed. This is kind of depending. Well, it's a combination of a few things. The Silver Eagles premium more or less leads the market. 90% silver, the old pre-1964 coins. That also is a really important bellwether in terms of premiums. Well, they both went to levels that were higher and longer than the 2008 financial crisis.
Yeah.
And so that was, it was unprecedented. And so so this entire time, like buying bullion was a ridiculous proposition because the premiums were just getting so high on so many different products that it was hard to rationalize because you had to make a huge gain in the spot price in order to recoup your purchase loss. So that's the point I was talking about. But here's the other point. I hear a lot of people who constantly think that just because the spot price is going to be going up, that premiums will keep going up, you'll never recoup or this or that. Well, look what happened in 2008 when we went off these peak banks are failing premiums. We went down to a level that didn't bottom until the actual peak in the spot price of silver. So there was a run when the QE, the QE and the first versions of QE really began from early 2009 all the way till the peak of silver. I mean, you had nothing more or less than premiums going down. And so you can see the blue line and the gray line tighten up as the premiums on a percentage basis tightened up because the spot, the underlying, was getting so much higher. So it doesn't necessarily mean if you have a climbing bullion market, what you're going to end up having is it shrink down. The premiums will shrink a lot more because, you know, obviously the spot price doubles. The percentage that you can allow that you're charging over the spot price is going to probably halve because there's only so many new buyers in the market and entrants who are willing to buy at those higher spot prices versus how many are possibly selling, et cetera. So you're making a market and the premiums just get more competitive. So this area right here where we've been in, this is not going to last. This is going to tighten as we go up higher in spot price over time. And so this is not going to be the norm for the industry. There will be times maybe of panic when there's deflation or some type of other bank issue where that could occur again, where there's overwhelming demand and the amount of inventory just gets overrun in their industry. But this is not going to be the norm, you know, for the next 5 years. I don't think. I think we'll see a tightening and it'll be more along these lines in terms of, you know, where we are in the future.
I have one question from a viewer. Do you think physical trusts work?
Physical trusts. Yeah. I mean, if you're going into a trust like an ETF, for instance, Sprott's PHYS, that's a pretty good one. I think Sprott has, what else? They have a silver one. It's called PSLV. Those are good. I think I own a few shares of PSLV. I mean, it's a good trust in the sense that they do buy what they state they purchase. They go out on the market and actually buy the stuff. If you look at for instance, the prospectus of SLV, they changed that prospectus in the Q1 of 2021 when the Wall Street silver Reddit squeeze phenomenon was happening, when we had a run toward 30 an ounce, and CFTC was freaking out, and the COMEX was raising margins like crazy one after another to try and get the momentum longs out of there. I mean, that was a real scare for them because they knew if you get beyond 30, you can get to 50 real quick. So they were freaked out at that moment. And SLV at the time saw how overwhelming the amount of demand for physical was. And they know that if the prospectus says that if they have capital inflows, they have to go out and buy 1,000-ounce bars. Well, they changed that. They say, well, if the circumstances are such that we can't get 1,000-ounce bars, we're not going to go out to the market and try and buy 1,000-ounce bars. Good luck. So you got a 70-page prospectus or 50-page prospectus with all types of writing that says we can fail and it's all your bag on secured shareholder. And oh, by the way, we don't have to go out and buy the bars. You know, so SLV is probably the worst thing you could purchase in terms of a market making mechanism in this industry.
Okay, well, you know, if you listen to this over the last 25 minutes, you know that James knows. So it's important if this is your arena, or you have an interest in it, from physical to central banks, everything gold and silver, James, your go-to guy. So
hey,
James, go ahead.
Dale, real quick, make sure people look at the Japanese yen's gold price. You know, every week we're getting a record price here. And that old 1980 high in silver, you still got a 4 multiple just to get back to the 1980 high.
Yeah.
So silver's dirt cheap, and this chart shows you. I mean, you're talking about one of the biggest reserve currencies in the world, and look how cheap it still is in that currency.
Yeah. Wow, great point on the yen as well. So you find them on Twitter, and you can find them. Go ahead, James.
Yeah. Twitter. I'm on Twitter at James Henry And right here. And then as well on YouTube, I do a weekly market update videos about the bullion market for SD Bullion. So just search SD Bullion YouTube and you can find our videos. Last week was a pretty good one. It got almost 70,000 views. So the algorithm liked that one.
Nice, James. Congratulations.
Yeah.
And Paul Landon wants to come down and play golf with you. So
all right, great. There's 2 courses. 2 courses down here. Yeah, give me a shout.
All right, James, thanks so much, buddy. Really
All right.
appreciate all your insights. I learn from you every time we talk. Every time.
That's
Thank you,
good,
James.
Dale, because that's coming from an experienced guy. So I appreciate that.
You know, keep an open mind. It'll keep your account open.
Good call.
All right, buddy. So James Henry Anderson, everybody. Thank you, James. And you could join the team in 15 minutes on the morning edge. We'll see everyone for the NFP tomorrow. And good hunting the rest of the day. Don't just count your pips, your coins, your bars. Count your blessings. Adios.